As we kind of look at September, and we were talking about this last hour, historically, it's been a kind of weaker month throughout, history. But, we had Fundstrat's Tom Lee on Fast Money last night talking about kind of the September dynamic. And he said that we could actually have a pretty dramatic rally in September amid a wall of worry, just given the strength that we've seen so far this year. What do you make of this month, especially as it pertains to all of the various risk factors out there, coupled with some of the technicals that we've seen?
Yeah, I think there are a couple of considerations. So first of all, we look at it against the backdrop of we continue to have a strong economic growth. While we think that will peak in the third quarter, when we look at the outlook for the forward 12 months, that still looks solid. A low interest rate environment. And so that still seems to favor not only stocks, in our opinion, but risk assets in general. If you look at the valuations where we are, why they may seem on a historical basis relatively high, not as high as people have seen. So actually valuations, as earnings have increased faster than prices, actually have come in a lot. So we continue to be structurally overweight risk assets here, and we do like equities in developed markets.
So the S&P 500 has closed at a record high 53 times, the most by this point of the year since 1964. By recommending being overweight risk assets, including equities, are you concerned that the market is due for a correction, just given how it's just been going almost linearly north, higher throughout the course of the year?
Well, one of the things we have to keep in mind is that the recent backdrop in terms of the consistent upward march of the market. But here's the thing we point out. To say that we might have a modest correction, even if you were to say that was in the area of a typical, sort of 5% pullback, maybe 10%, we don't think that's enough to cause you to shift your weighting away from risk assets. The practical reality is this. Over long periods of time, there are very few instances where you see a material correction in the market that is not accompanied by a recession. And for what we look at in terms of the economic backdrop, we just don't see a recession in the cards.